Happy Friday, the Friday before Thanksgiving, and mortgage rates are holding steady, up slightly from last week at 6.36 to be exact. And the real talk, where the Fed is talking tough, the market is calling their bluff and thinking something completely different as we head into the holiday season, which really could present a very strong opportunity for our clients that take action before the quote unquote slowdown of the holidays. So let's break down this week why we see this as an opportunity for our clients to act now and really what we can expect going forward. So, first things first round of data we received post the shutdown. So, this backlog of information that was supposed to be released in October that just went to the wayside because the government was shut down. We got that first iteration on Thursday through the form of the infamous jobs report. Now, keep in mind, this was for September. So really, effectively, this is stale data, but it did move the market. So it was a mixed bag of information. We saw a beat in new jobs created in the month of September, 115,000 compared to the 50,000 that was estimated. But the kicker and the thing that got the market rallying against what we saw earlier this week, unemployment. Unemployment moved from 4.3% to 4.4%. And that sparked a rally yesterday, which recaptured some of the losses experienced earlier this week, which I'll get to here in a second. And it's for the sheer fact. Multiple times throughout Fed press conferences, Jerome Powell mentioned one key attribute. We need to keep our eye on unemployment, the unemployment rate. And seeing the unemployment rate move from 4.3 to 4.4 was enough to say, hey, where yes, we know Jerome Powell said at the last meeting, the rate cut for December is not guaranteed. Well, the fact that we saw unemployment move higher, mind you, for September, got Wall Street thinking a different story. So let's dive into that. On Wednesday, we received the Fed minutes for the last meeting. And yes, as we know, that tone was hawkish. No rate cut in December. It's not yet guaranteed. We're very closely watching inflation, our runoff, quantitative tightening, where yes, it's ending. We're not reinvesting that into mortgage-backed securities. Well, all that took the wayside with this jobs report. So again, why this is important to our clients and why this sets the opportunity. Hey, this is normally the time of year where people's focus is elsewhere with just cause. We've got the holidays. We've got Thanksgiving next week, followed by the round of this December holidays, Christmas, Hanukkah, the list goes on. People's focus is elsewhere. They're not focused on transacting in real estate. That presents an opportunity for the clients that are serious to get in and negotiate before the frenzy really begins when rates start coming down. So why it's important. This is the information we need to communicate to our clients. We need to lead with clarity. Explain how jobs, rates, the Fed can impact your position here today. Yes, where we still believe interest rates are headed lower. It's going to be a rocky path there. But fundamentally, the stage is set for housing to continue to accelerate. So let's take advantage of the opportunity now and ensure our client success. If you find this information helpful, please like, subscribe, share. We want our message out to as many folks as possible to ensure we can help as many people that are out there. As always, let's make it a great Friday, an even greater weekend, and happy Thanksgiving next week. We'll come to you again on Friday. Talk to you soon.